Hi, and welcome to another edition of Zeus TV. I'm Stephen Kaufman, and this is
Roger Salinas.
and we are doing this TV series so that we can share valuable information about real estate and finance topics to our customers. And today we're talking about what, Roger?
Hard money. What is hard money?
What is hard money?
You tell me. What is hard money?
Hard money got its name from the terms that are associated with the loan. There are loans that have soft terms, which are lower, soft, and flexible, and there are hard terms. Hard terms are usually higher and more restrictive. And a hard money loan is a loan that's typically referred to as a bridge loan or a temp to perm loan. So temporary financing to permanent financing.
Yep,
And
heard of all that before.
Got it. And it's usually used to acquire a property, remodel a property, or rehab a property, rehabilitate the house, and then used to put permanent financing on the home.
Right, exactly. And we want to talk about that. We also want to let you know why someone would want to do a hard money loan.
Why would they? Why would someone want to get hard terms when there's such low interest rates?
Awesome, fantastic. So there's four main reasons that I'd like to tell a customer why you would want to get a hard money loan. The first reason is that the condition of the property is such that a traditional conventional loan will not meet traditional conventional financing. So the lender will not approve it because of its condition. So that's the first reason. The second reason is the loan has to close so fast. So for instance, I had a customer about 2 weeks ago called me telling him that his neighbor was getting foreclosed. The house was going up for auction the first Tuesday of the month, and he needed money quickly. Enter hard money. Where a traditional conventional loan, it can take a month or longer
So
sometimes.
let me get this straight. The first reason is that you'd want them. You said is that you want to close fast, or is that the second reason?
That's the second reason.
What's the first reason?
The condition of the property.
So a normal bank like us, who is a mortgage lender, we won't lend on the property on a traditional loan.
If the foundation is cracked, there's broken windows, there's broken doors, holes in the walls, the pipes are showing it's exposed, things of that nature, cannot get a loan approved through a traditional loan.
Okay, but what if a house needs just a new dishwasher?
Then it doesn't need a hard money loan. That's not a reason why you would want to do a hard money loan.
Okay, so it doesn't qualify for the condition, and then you want to be lightning fast. That's a Zeus pun right there.
Very good. I caught it. So those are two reasons. There's a third reason. If someone doesn't qualify for a traditional loan, so my credit, for instance, is just not strong enough to get a traditional conventional loan, or I'm transitioning between jobs, or any other reason why a loan
You're
a traditional
you're
loan.
self-employed and you don't reflect a lot of income on your tax returns, or you're retired and you don't have a lot of regular income, but you have a lot of assets, things like that.
Yep, exactly.
Okay.
That would be a third reason. And then the fourth reason, and the most common reason, is, listen, it costs a lot of money to buy a house these days, an investment loan. You need 25% down. The house needs $10,000 or $15,000 worth of repairs, and another $5,000 in closing costs. So a traditional purchase of an investment property can run up to $40,000 sometimes. And a hard money loan, if it meets the criteria, you can get into it for nothing, really, if it meets the guidelines. Nothing.
So I guess before we get to the rest of this episode of Zeus TV, you want to make sure you look at our video on our episode on how to buy an investment property with no money down. That's another video that we're doing.
Of course.
So maybe there's a fifth reason that kind of goes along with the second one, which is if you want to close fast. I guess another time investors want to use hard money is if they are wanting to make the appearance that they're buying a property with cash, right?
Yep.
Because they can close so fast. It goes along with the first one. So they can close very quickly, so that they have this really beautiful deal that you want to get closed, and you know that if you take any longer than the next guy, they might get to it first. Speed is very important, but also you can make the appearance that you're buying cash, because usually home sellers believe, or they have the presumption that if you can close in 3 or 4 days, then you must be paying cash.
Exactly.
So that's another one, right? So that we talked about what hard money is.
Yep.
And why you'd use hard money. How in the world does hard money work? That's what really our investors and our customers want to know, is how does this work?
Very good. So we can run through a really quick example if that's okay with you.
That's great. I would love that.
So let's just take a basic home, standard 3-bedroom, 2-bath, 2-car garage. Let's say the ARV, the after repair value of the house.
That's an important term, right? A lot of investors don't understand that term. That's like the fair market value of a home, what it will sell for after it's repaired.
which we refer to as the ARV. Let's just assume it's for easy purposes, for easy numbers. Let's say it's 100,000.
That's what the ARV is.
That's what the ARV
The
is.
after repaired value is 100,000.
And the house is in distress, and the house needs repairs, and you're picking it up, or the investor's picking it up for $50,000. Is that a good number?
50 cents on the dollar. It needs a lot of work. It's the ugly house. The grass has grown up everywhere. The mail's stacked up in the mailbox.
Exactly. It's got a board on the windows. We've all seen those houses. Nonetheless, so let's say, again, for simple numbers, let's just say the house needs $20,000 worth of repairs. So it's worth 100. You're buying it for 50. It needs 20 in repairs. That's $70,000.
So far, so good. I got it.
Okay, very good. Let's just say on that same example, or I apologize, we can do a loan on that, on a hard money loan for
70%.
70%.
65 to 75%.
65 to 75%. Let's just pick the middle. Let's say 70%.
65 to 75% of the after repaired value, in this case, was 100.
Right.
So if we're going with the middle, which is 70, that puts us at a maximum $70,000 loan. So the max we would loan, and most hard money lenders will loan in this scenario, is going to be $70,000 on the after repair value of 100.
Right. So 50,000 plus 20 in repairs. So in that example, we'd be able to close on a loan relatively quickly, and you'd only be out of pocket, say your closing costs. Let's say the closing costs are $5,000.
Okay.
So 50 to buy, 20 for repairs, 5 for repairs,
Five for closing.
5 for closing. I apologize, and that's what you'd bring to the table, $5,000 on a hard money loan.
Well, you said you can close that pretty fast. What does pretty fast mean?
So, without rushing everybody, we can close a loan in 10 business days.
So about 2 weeks. I know that at Zeus, I've been a part of a transaction that closed in one business day. The customer called today, and we closed in the afternoon. That was pretty rare because I had everything else together. But typically, we're waiting on title. We're waiting on the survey company to get the survey together. But if all those things are in order, we can typically close a hard money deal, a hard money transaction in anywhere between 3 and 7 business days. We're always looking for 10 because that's 2 weeks that we get to make sure everything's right and no one feels rushed.
And the main reason why we can close so fast is because we're
We're the
using
lender.
our own, yeah,
We're the bank.
exactly.
We're the
We
bank.
underwrite the file, we do the appraisal, we do everything, and therefore we have control without waiting on someone else to do something for us.
Yeah.
So that allows us to close really fast.
Yeah, and our customers absolutely love the fact that they're calling here, talking to the decision maker.
Right.
The loan committee is at Zeus headquarters, so it gives them a lot of flexibility. If there's something out of the ordinary, something that needs to be changed or different, it's fantastic.
I did want to address the repairs, the 20,000.
Yeah, what does that work? So if we said this property is being picked up for $50K, it needs $20,000 or $50K in work, we're not going to send them home with a check for $20,000, are we?
I would hope not. We've learned our lesson a long time ago. When we give people money, just pat them on the back, say, do a good job for us. That doesn't work really well. So what we've done is we've decided you do the work and we will reimburse you dollar for dollar.
Okay, I got it. So I guess another way that we could explain this is it kind of works like building a home or a construction draw if you've ever bought a home or you're familiar with that type of financing. Where as the builder's making progress in the house, you do a draw to get the money back.
Exactly.
The hard money program sounds like it works the same way, and I'm pretty sure that it is.
That it is. Very good. So what next?
So the $20,000, the repairs. So they are going to do, let's say they're going to fix the foundation. You mentioned foundation earlier.
Yep.
They're going to fix the foundation, then they're going to send in a request for reimbursement. Either they paid the contractor or they didn't pay the contractor, but they have done the work. I guess the next step is what we'll do is we'll send out an inspector.
Yep.
The inspector will make sure the work is done up to code, which protects our customer, protects our investor to make sure that there's no code issues. And then we fund the money. How long does that normally take?
A couple days. 2 to 3 days to get it done.
Okay, so send in the request on Monday. Wednesday, you're going to have a wire in your account for the money that you requested.
Exactly. It can be broken up in draws. Not draws per se, but in chunks. So if you do $10,000 worth of work, you can get a $10,000 check.
Or if you can do it $1,000 if you want.
You could, absolutely.
I guess the caveat to that is that you're paying the inspector every time he goes out $100 or so. So you're paying $100 every time you request that to the inspector to make sure the work's been done up to code. What about, here's a question everyone wants to know, what if they don't need the repair, the draw for the repairs?
Right, so then in that example, remember the initial loan was for $50,000, so you're only paying interest on the $50,000. We still want to hold the money in escrow because God forbid what happens, Steven's walking down the street, gets struck by lightning, that's a Zeus pun, and there is no more Steven. So we want to ensure that the money is there for repairs so that we fix it if we have to take it over.
But the way you just described it, let me see if I can clarify that. It sounds like there's actually money sitting aside. It's not really money. It's more like a line of credit. It's more like a credit card through Zeus Mortgage that you can use for your hard money loan. So it's just allocated to you, and it's available to you, but you're not forced to use it, right?
Exactly.
You
Very
can-
good.
Yeah, got it. Love it. And so what about terms? I guess this is one I know about. The terms on hard money loans can range anywhere from our current program, which is a blended interest rate of 7.7% all the way up to 16%. In some companies, it can go up to 21%. So it can be pretty expensive. You have to weigh out the cost benefit of, is it worth paying a little bit more in interest, even in as high as 15, 16, 17%, to be able to buy a property in 10 business days, have all the repairs financed by somebody else, and then ultimately end up with no money out of your pocket in that transaction. And that's really the decision, the cost benefit. And Zeus Mortgage, our loan officers are equipped to handle that conversation.
One of the things that I've been hearing recently is, hey, do I need to have good credit to qualify for a hard money loan? And the thing is, most people, there has to be an exit strategy for a hard money loan. We have multiple programs. For well-qualified buyers, you can get a really, really low rate for hard money, that is.
Yeah, 7.7%.
Exactly. And if you have a 400 credit score, you had a bankruptcy yesterday and a foreclosure yesterday, and you had your car impounded as well, you could still get a hard money loan. We have terms, we have lenders that will provide us with money for that customer as well.
Yeah, so I guess the final thing I have to say about explaining a hard money loan to someone who's just getting started or learning about them is that if you watch those late night infomercials and they show you the ugly house, they show a new loan with no money out of pocket or a little bit out of pocket, and they show the person have this big mansion, took a shack and made it a mansion. They have no money out of their pocket and they just hold up the really big check. Look, I made $50,000. A hard money loan is the loan that enabled them to do that. And we offer that, and it still exists. And again, you don't want to miss our episode that we're doing on how to buy rental property with no money down, or how to buy investment property with no money down, because we're going to show you how to buy multiple properties with no money out of your pocket ultimately, and that's a fantastic episode.
Awesome. I can't wait to see it.
Okay, so again, I'm Stephen Kaufman.
I'm Roger with Zeus Mortgage.
And this is another episode of Zeus TV. Stay tuned until our next episode.
See you then.